So today we will look at the stock chart of Ashok Leyland and see what we find here. So first let us start with the weekly. Now Ashok Leyland is a chart which is pretty organized, and I always go back to this for clarity because it has pretty good clarity. And we have been following this chart for a very long time, ever since the 2020 low over here. And from here, we actually had counted 5 waves up for wave 1 and 3 waves down for wave 2. And then there have been a series of uptrends where the chart actually goes into an uptrend, then corrects very nicely, goes into an uptrend, then corrects very nicely, goes into an uptrend, then corrects very nicely. So this is a very organized and pretty uniformly patterning chart, let me say it like that. So if you see now what is happening at the current time. At the current time, after this uptrend, it went into a prolonged correction on the weekly chart. But all this correction is into converging lines. It was a descending wedge kind of structure. And in all of this, the stock was making lower lows, lower lows, lower lows. But if you see the RSI in the bottom, it was not making a lower low. And in fact, the last lower low which the chart made, RSI was very high here. So obviously this downtrend was coming to an end, but we were looking for a trigger to go long on this chart. And that trigger came when it broke out of this trend line here, which was around 215. So we did make a position on 215 and we are continuing to have that position. And actually, I made the position a little bit earlier, but that was based on the daily chart. So let us have a look at the daily chart and see what was happening over there. And in the daily chart, it was interesting because you can see here that this is the descending wedge formation which we had identified in the weekly chart. And again at 215, this is what it was breaking out. So actually, we actually made a position earlier on based on candlesticks and our other proprietary indicators. Actually, I bought the stock when it gapped up here because this showed that this move which was happening on an impulsive kind of a formation, and it was likely that this whole descending triangle was finished. But anyway, even if you had bought it over here, you are still in good profits. But the point here is that you have a lot of space to go up. So go back to weekly and you will see what I'm saying. This chart should take out this highs at the very minimum. So we are looking at a target of 265 at the minimum. But if you look at the history, usually it goes beyond the correction. So if it takes out 265, what do we do? So let us look at the further targets on this chart. So looking at the reverse Fibonacci ratios, I would think that the target of 291.95 looks to be pretty much achievable in the due course of time, maybe in about 2 to 3 months. But this is a good chart where you can stay long very comfortably and just trail your stop losses. As of now, our stop loss is now very far, but we are in good amount of money. But this is just to illustrate how you can identify very clear-cut breakouts, buying opportunities, and resumptions of the previous trend. So there are many charts like this, but this is one of the first that I thought I will discuss with you guys. Till then, take care. Bye bye. I'll come back with another chart of a similar nature very soon.